The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time. And the Dow's up 185 at 17,553. Huge comeback from early yesterday morning when it was down over 100 points. S&P is up 22 at 2,044. Comp Index is up 54 at 5,006. You've got gold down just 3 at 1060. Ooh, the 1060 level is important. Silver's up 0.02 at 1372. Platinum's up, and high-grade copper is stuck in the 205 area, and crude oil is at 36.77, up a little bit. Bonds are down over a point, down 1 and 8/32. And the dollar is up 54 cents at 98.19. This is important. Let me show you something just as I go to that. Let me also show you that we've got, if you're looking at Tiger TV, on the left, you've got the E-mini. This is the March contract. Made a low of 1983.25 yesterday, had a huge reversal, and then a spectacular day so far. Got repelled. At this point, it's been repelled from the 9-period exponential moving average, but it's still up 27 points. The weekly chart is still, the MACD is still very strong. Stochastic still at 82%. Remember in that webinar that I did last Thursday night, kept talking about the strength of the weekly charts, and that's going to be a big deal come Fed news. And you've got the 120-minute chart in leg B, probably peak B right now. I think we might in fact have made the high of the day, because at this point you start to get folks getting a little nervous about tomorrow, and maybe we will see some kind of a stalling motion, at least into part of tomorrow. That sounded terrible, didn't it? But everything's fine. Just a strong wind came right through because I opened the window. Imagine opening the window December the 15th in Boston. Unbelievable weather. All right, so let's move on. And hey, what great program. John Logan, he spent a lot of time this morning discussing the techniques that are available in his TAS system. Fabulous, answering questions, just going through a whole panoply of ideas and techniques and things that they do together. Then comes Larry Pesavento, wonderful show. What did he do? Made a fabulous trade, took off the trade, and that was something. I've had that happen where my system is frozen and I'm about to close something, or it's worse when you want to close something. If you're about to put something on and you miss your entry point, you can always get another opportunity. But to get out of a position with a frozen computer, whoa, that's why there's different systems going here. That is a horrible experience. And then what happens, it happened to him as well. I've had this happen. But not only is the program that you're looking at frozen, your whole computer freezes up. Oh, anyway. He got out of it. Great trade. Larry, congratulations. And then, of course, Tom O'Brien, Tom and Tommy were discussing a whole, just a slew of different aspects of the market. Also, fabulous program, fabulous discussions, and great interview. We've got quite a roster here at TFNN all day. It's just fantastic. Kevin Hinks comes up for another swimming lesson straight after my show. Wow, what information you get from that. Then you've got Steve Rhodes. Congrats, Steve. You were talking about a turnaround, and boy, was there a turnaround. Great turnaround. Then we've got Dave White. He's been talking about a turnaround. He's been waiting to put on option trades, I believe. Wow, this is just a great time for doing that from early yesterday morning. And let's see, Dave. And then, of course, you come back to Tom. And Tom wraps up 3 o'clock till 5 o'clock. The day's trading going on until the 4 o'clock close. Then he continues and tells you what he's looking forward to seeing tomorrow, what he's expecting, the different areas that he's covering. Really great detail. And then what happens? you get Andy Hecht. What a Tuesday you've got here. Andy Hecht, commodity. Now, I got to also mention something else because we're about to run out of time. Let me go to the front page of TFNN, right there, TFNN. Look what we've got. You've got Tiger Dollar Holiday Special. Every purchase leads to a donation to the Salvation Army. Nothing to dismiss. Why? Because not only do you do a good deed, not only are you helping people, but the promotion itself gives you a great a benefit, a 25%, up to a 25% bonus, and you get 10% of your purchase that will be donated directly in your name to the Salvation Army. I mean, that is really cool. All right, so let's get back to business here. Out. And we're looking at a massive move up in the Dow after a whopping move down. And we haven't broken above it. We haven't broken above 2,047. Oh, this is the S&P. Yeah, 2,047.75. We haven't broken above the opening price and high of the 11th. And that was, excuse me, and that was Friday. So it's really important. You've got nice action here in the stochastic and the MACD in the E-mini 120-minute chart. It targets 2,052. Some point this week, probably, if we don't smash to the downside and take out 2024 support to 2018. Start to close below 2018, you're giving back a chunk. Now, there are really mixed signs here. So this is time where I'd like to do this. See this chart? Let me see. Can you, I want to see how it's coming out on Tiger TV right here. Good. Okay, you can see it clearly, even if you're looking at it on the small screen. You see that support level, that red line? Well, the S&P, for a very long time, since 1994, has been in an up channel, decisive up channel, up to the March high of 2000 at 1552, plummets down in another beautiful channel to the 768 low of October of 2002, rallies up again to the high of October of 2007. Remember, the Dow made its low in March of 2003. So there was a slight divergence, if I remember correctly. The semiconductor, the SMHs also did that. And then rallies up to the October 2007 high of 1576. Plummets down over 50%, 52 I think it was, percent to the 666 low of March of 2009. And now we've been in this very extended channel. It's even longer than the 1994 to the 2006 year rally, because the channel is still held, even though we have gone beyond 6 years. Am I right? 2009, 2015, yeah. So we've gone beyond, but look, we keep testing the Chapman wave inside track support level, but we're above that green line. We're not under the red line. So this is so far, exactly mid-December, the market is holding fantastically. Well, I couldn't have said that just yesterday at this time. I would have said, whoops, we're underneath here, got to be real careful. But it bounced right back. So what it's saying is, let's just say it takes all of December. It doesn't take out the 1954 important red line support level. But in fact, what it does is it hangs out for the next 2 weeks. It doesn't go terribly far, up and down, but it does not make a new high. If in January it makes a new recovery high above November's 2116.48 high, just 1 penny, that starts gray leg B. But nothing happens until you take out 2134.72. In fact, I really need to put that in as a decimal right there. 0.72, because if you go to 0.73, yes, you could be double topping, but what are you going to count that as? I have no choice but to count that as either A or B. If it's in January, it'll be B without new high in December. So this is such an important period. Now, there's a pattern that I talk about very often, and that is the arch formation, like that. I'm putting it in here. I'm probably going to take it away because I don't like to have crowd. This is a very clean chart. If there is a failure here and you create this arch formation, you could quite easily start to test that very important up channel. Excuse me, up channel support level. Question in the den. This is a great question. This is actually probably one of the most important questions you could ask right now. Peak D in the den asked, Basil, 4 horsemen, United Technologies, UTX, Triple M, 3M, IBM, and GE. Triple M sent to glue factory today. GE, only a horse left running now. Let me show you something. GE holding absolutely fabulously. It's at 30.40, holding above the 9-period moving average, gone sideways. And actually, this one is, I'm not sure I can actually call it an oval pattern. I'm going to have to. No, I can. Just an extended oval pattern. I'm going to put it in as an oval pattern. It has a couple of implications here. 1, 2. Oh, no, we took that out. We took that out, so I can't. Going back to the rectangle. So at this particular point, I have to think of it more as a rectangle pattern. I knew there was a problem. My eye said so, but my mind didn't. Okay, that's a rectangle formation, and GE is holding above the 9-period moving average at 29.75 in the weekly chart. The MACD is strong. Stochastic is really strong. We had it as a buy. I decided the other day that I didn't really want to take a risk with it. And we got stopped out for a tiny 24-cent loss at 30.24 we were in. But it's held. It's back again at above 30.24 where we got in. And it keeps doing that to me. So I'm looking at this and I'm saying that weekly chart so far is not breaking up, it's not breaking down. So that's good. And the monthly chart is in a G/A. It's just unbelievable, the count. If it's an A, it says General Electric could still go to B, C, and D over the period of 2016. That is incredible. But I need a little bit more evidence to say that it is not going to pull back under 28 and have a consolidation. IBM, second in my Dow quartet. Coming off the bottom, doing okay, but really the monthly chart and the weekly chart are not very good at all at this particular point. However, there is enough evidence to suggest that if IBM, and this is really unusual, if IBM is able to clear 140, it's at 138.47, up 255 right now, holding well. If IBM is able to clear 142 and start to trade in the 142s, I'm going to suggest that the weekly chart has a very successful turnaround and that IBM, with all the bad talk and everything in the horrible monthly chart, is probably going to rally a little further into early January. If it takes out the low that was made back in the week of the 13th of 131.65, doesn't even have to close under it, just has to take it out. That's just suggesting IBM is going nowhere fast. Now, Triple M, look at this, gap down today on some bad projections, and UTX, we'll talk about that because these are the 4 horsemen I look at a lot, and we'll talk about what's going on. I'll be right back. Dow's up 194. Love to take your calls.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back. Actually, I want to read this email. It's from Al. He says, please say you bought, this is yesterday at 3 o'clock, sends over this email saying, please say you bought the SPY, Qs, IWM, XLE, anything, and covered your shorts. I bought SPY, IWM, QQQ, XLE, and CVX at the close Friday, and at the open bought more SPY, Qs. It's a heart attack trade. Wow. Well, if you want to be in the heart attack business, Al, congratulations. But right now you should be really relieved. Fantastic trade. You really nailed it, and I have to congratulate you. That is very good. Now let me just go to now. Anyone's going to send me emails? Don't rush and send them all in the last 3 minutes of the show. Send some of them now. I'll be able to get to them. So what I want you to show is that Triple M had earnings projections which are not satisfactory, and they plummeted. They're down 7 at 150. They were holding after a peak G double top. It was like a C1, C2 peak, C1, C2. And the weekly chart is the same thing, peak C1, possibly peak C2, but the MACD is still good, stochastic's still good in the weekly, and the monthly chart is making that H pattern I was just talking about a moment ago. So this is going to be very important. I don't ignore things like this. This is Triple M. It was absolutely the most look at this chart. It was a spectacular trade for those people who hadn't moved above the 9-period exponential moving average, and it just stayed there at once out of all this period from the high that was made in October of 2011 at 82.40, low of 68.60. Only once did it close twice did it close under the 9-period moving average. Otherwise, it was there all the way through until it hit 170 and then reversed. And in June, it closed under the 9-period moving average, and now it's back there again. So this has been a spectacular trade. It needs a little time to digest, but when earnings projections are not good, that can last a whole quarter. So is Triple M now out of the show for a quarter? A UTX, in fact, had been like that. It gone from 124, plummeting down to 85s. Now it's trading at 93. Trying to hold its own, but not showing that much strength. And the weekly chart says trying to get off the ground. I need more time. So I'm really looking at this as a rotation into, look at this, Procter & Gamble into defensive. Look at Procter & Gamble up $1.42 at 79.72. Nice action, very nice action. This is a leg B in the monthly. What was the other one I mentioned for subscribers? Kellogg. Look at this. Nice leg F, could be /B, but it is holding. The MACD is good, stochastic's good, weekly chart is improving. So you've got some action in the defensive yield type stocks. And that to me is important. That's part of this whole rotation. That's what I'm talking about. Is the market going to rotate? Now, I made a mistake yesterday. I had it on my list to buy the UDOW is 300% long the Dow. I was even thinking just maybe a small position, but it was starting to get a little complicated because I felt that if there was a pullback, I didn't really know, and I had this with the Dow. I could have related it to the Dow. It just seemed to me it was getting to be a complicated trade, and I don't try not to do complicated trades. But basically, we had a left side, right side price time match with a Chapman wave inside wedge going right down to the low of yesterday. The 14th was the target date. The next one was 17,210 was the low, or 17,180 in that area. Well, where did we go to? We went to 17,138. So I was really. Sometimes you just can't keep, you just have to say, I missed the trade, I missed the opportunity. My biggest concern here is that it's not the opportunity 138, 17,138. It wasn't the opportunity that is upsetting me. It's the fact that when markets take off, if they start to take off very strongly, you have to consider that there's a chance that you can't get in. And that's my only concern here. And we had some buys this morning that we just missed by the days. Yeah, they could still pull it back. Now, as to Al, when he said, tell me you covered your shorts. I have not covered my shorts because the shorts that we have are what I would call potential secular, more intermediate term to longer term positions that we have. And we'll see. And in fact, the market is up 200, Dow's up 200, S&P is up 24. One of our stocks is down over 2 points. And another one is, the short that is up only 50 cents, but down from where we've shorted. And so we'll see. You've got to do what you got to do based on your techniques. So this is very important. The stochastic and the daily Dow chart is turning up. The MACD histogram is starting to improve, but it hasn't crossed positive, but it is improving. So this is a very important moment because I think that the market has put in to its thinking that the Fed will raise. So I don't know what else you could expect. So question in the den, we will look at ZTS or FIT as soon as we get back. Basil Chapman, Tiger Technicians Hour. Dow's up 205, S&P's up 23. I'd love to take the calls at 877-927-6648.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman does up 198. S&P's up 22. And question of the Dan, 2 questions. One is a statement that says, looks like gold and silver are short. Yeah, you know, gold, look at the dollar. The dollar is turning, this is a very good candle so far for the day. It's not the start of anything, no. I shouldn't say it's not this. You can't tell if it's the start of anything big, but it's not a breakout yet. It's got to go all the way to 100.52 just to make a new high, recovery high. But a breakout would be in the 102.50, now 102.80 to 103.30 area. I would consider that a breakout that has raised the base and is saying that the dollar is going even higher. So at this particular point, nice turnaround, great candle, this leg A up in the 120-minute chart. So this is impacting the fact that the gold and silver commodities could not power much higher is a big thing. So let's go to we've got Greg in San Mateo, California, and this is a great question because it goes right to this commodity issue. Greg, how are you?
I'm well, thank you. How are you, Basil?
I'm well, thank you.
Yeah. So my question is I'm in one of the multiples that follows the oil fund, and I'd like to know what you would like to see that move higher, for the commodities move higher, maybe the dollar to move lower. But I guess one of the things I was looking at is that and maybe how you feel about this since moving into the Fed, that the volumes are a lot lower. And when I'm looking further back, when oil moved up and the XLE moved up back in August, off of those lows in August, the volumes were a lot higher.
Massive volume. It was
exactly.
87.8 million contracts, or at least USO, at an 87.8 million day on the 31st of August. It was the high for a little while at 16.15. I tell you what I'm looking at here. The way that the arch formation has curved over and then accelerated down says to me that the low of 1237, the low of the 24th of August, that was turnaround day in the stock market, is very important. And what you need to see, and yesterday when we were speaking, I can't remember if it was someone in the den. Did I get a call? Was that a call? I can't remember now. But I was looking at crude oil and I said, right here, someone said, what would I do? And I would say I would nibble on it right here. I think it was at 11.18, something like that. Now it's at 11.41. No big deal, but it is the first time that you've seen this kind of candle with the unbalanced volume turning up. The stochastic slightly high at 7.9%, still pathetic, but at least turning up. And the MACD showing some sign in the histogram that is making higher lows and higher highs. And that histogram, to me, becomes quite important. So this is what I would look for. At any point, I think it does rely quite a bit on the relationship of the dollar, but just on a short-term basis, sometimes these things can establish an independency. And that interdependent move, EUR-USD, I just want to see how the euro, you see the euro has spiked to a leg B, pulling back now, but the stochastics at 86%. MACD is good. I think that the dollar is going to be really important. And I'll tell you what's very important is that, do you have a position, you say, in any of the oil? You do. So is it a position?
It relates approximately to in the USO at I have one position at about 11.20 and one at 11.30.
Oh, that okay. You see, if you have it underneath the low that it's at right now, then I can say to you, if at any point between now, I'm going to even give it Wednesday afternoon into Thursday morning at about 11 o'clock when I'm doing my show on Thursday morning. If the USO is not broken 10.79, you'd love to see that, of course, because if it breaks 10.79, it could be a real quick dip down to the 1050s. No big deal, but it is a percentage basis when you're buying a lower priced issue. So here's what I'm looking at. You're in the position. I don't know what your risk-reward emotional ratio is. If it was me and it was my first time I was getting into the position, I would say, you know, if it's your first time getting into the position and you haven't had any psychological baggage based on the USO before, or maybe you've had a little bit, you've also made money so that it's kind of broken, you're a break-even person on the USO, the United States Oil Fund, I'd give it a little bit of room. And I'll tell you why. The way I'm looking at USO at $11.40, all you need now is time. If it takes out the low that was made yesterday of 10.79, the way the chart is forming, the way the stochastic is forming, the way the daily technicals are relating, not the monthly, but the daily and even the weekly to a certain extent, I think you'll be able to get 1140 is what you'll be able to get within the next 2 to 3 weeks, even if it goes lower, because the ratio of the 1-to-1 to the downside is such that it could extend a tad lower. But at this particular point, my thinking is that it has a greater chance of going $1 higher than $1 lower right at this particular moment. This is just my thinking now. Of course, we don't know because the dollar could have an amazing move at 2 o'clock on Wednesday. And by Wednesday at 4 o'clock, it could be an amazing move the other way. You never know. So now I'm saying to you, if you've just begun the trade, you might say, well, one of my stops is going to be 1 penny below 10.79, and the other one I'm just going to hold. And to me, that makes sense because in time, in price, in magnitude, the USO even though I'm thinking that it's going to go lower later on, I think right now is getting ready for at least an attempt to a bounce. And if it bounces, it could be pretty quick. So that's why I'm saying to you, it depends on your risk-reward ratio. But if you feel that this is a position and you feel like me that the average of 1137 and it's trading at 1141, you will get back that 1137. You'll have the choice to get out at some point with no loss over the next 2 to 3 weeks. That's my thinking. Could be wrong. I think that you've got yourself, this is the first time I can say, this is a position that I think has a little bit more, no, it has quite a bit more percentage gain potential than loss if you want to give it time.
Right. Well, I might just end up taking half my position off and see what it pulls back to. I kind of trepid about the Fed coming up, but it's acting really well considering how gold is acting today and the dollar.
It is. And not only that, if I look at the SCO, which is the ProShares Ultra Short Bloomberg Crude, if I give myself DEF, however I look at it, the high that was just made at 138.40, it looks to me like it's now, even though stochastic's great and the MACD is good, that it could have a pullback from 182 to test the 9-period moving average in the 123, 122 area. And the U-shaped pattern in the weekly is not unlike it actually looks very much like it's mimicked the dollar because it's in leg C. In the monthly, just squeaked to it, and now it looks like it needs a little bit of a rest. Yeah, I think that I'm quite comfortable saying that. That doesn't mean to say you can't lose money, but I think that this is the time where there's a ratio that says, even if it's whippy, there's a good chance you'll be able to get at least your money back over the next 2-3 weeks. But most importantly, if it gets to 1230 or even 1240, all of a sudden, I think a lot of people will start to have to cover, and you could get a nice acceleration.
You bet. Yep. That's a good level to look at. That's what I was looking at to fill that gap.
So let's see what happens. Oh, well, good luck with the trade.
Thanks so much.
Thanks for calling, Greg. Greg, San Mateo, California. We're going to go to George in New York. George, how are you?
How are you?
I'm very well, thank you.
Very good. Unfortunately, I wanted to look at crude oil as well.
Well, you can look at it because you have different time perspectives, so it doesn't bother me. That's fine. We can look at it with a different perspective.
And, because there's a thesis to, or a madness to my thinking. If we could look at the monthly chart and draw a trend line from a 1065 low back in around December of 1998.
Are we looking at the crude oil continuous contract?
I'm looking at light sweet crude oil futures.
Yeah. So I've got, someone's going to have to help me here. This is an Andy Hecht question. I've got crude oil continuous contract January 16, and it goes back, and I was told that someone else, been told by a couple of people that have Think or Swim, that they have a different chart, that they are not as low as mine. But I've used this for a long time. It seems to have worked for me. Let me do this. I'm going to go
It looks similar to mine, Basil. No. It looks similar
great.
to mine.
So let me just show you what I drew a long time ago. Back
You're
at the
showing
low,
37 and change right now, right?
Exactly, 37.17. But let me just show you something.
Me as well.
From the low that was made way back in, let me do this. I like to go from highs to highs. From the high that was made back in March of 2003, I'll say it's at 102, but that because it's being smoothed out, these prices can change. That low comes right in. Let me just, I got to move it now because this contract there you go, to the February low of 2009. If I draw a straight line, a long-term line, and I'm also looking at it now. Give me a second because I had done this before. I'm going to do it again.
I'm going back further,
I can also go back further, but let me just do this for now because I want to show something really interesting. We've exceeded in the price, the left side price time match. It broke. It was 1 month early. We broke the support level of 2002. of 2009. We went below it, and now you've got a leg G. I could call it an alternate count, but I'm calling it G for now. And it has just snuck underneath that long-term downtrend dash red line. The MACD is very negative. Stochastic has a slight positive aspect to it because it's higher now than it was when the crude oil in January of 2015 was much higher. So I just wanted to show that on a very long-term basis, key support levels have been broken, but this is the month in this arch formation that this month or by next month at the latest, it has to break and it has to close above 39.65, and right now it's at 37.20. I just wanted to get that so that we were talking apples to apples. So now we can go to what you were talking about before. Yes.
Okay. So then, again, what I had drawn for myself on the Thinkorswim platform is if I take my 1065 price point of December 1998 low, and I draw my monthly trend line, use bar charts. I do not use candlesticks.
Okay.
This way I could be more specific.
All right,
So
I don't
now
go back that far.
Okay. I have so this is a secular chart in my eyes. Now, upon drawing that, I get a trend line of 43 and change. And I had said this months ago to you that we may get a whipsaw into the 30s. So this is what I'm thinking we have right now, is we have this whipsaw into the 30s. So the point I'm trying to bring out is I'm not getting bullish on oil, but what I'm saying to you is, and this goes back to what you've always reiterated this year, is it's the bifurcated market. But I think what we have to do on oil is go into stock selectivity. We have to go into some higher quality oil stocks that have been beaten up. And at that point, maybe the thesis should be for 2016 is to take some long position on them.
All right, so you know what I've just done? I found another contract, and I'd forgotten it until I did my, I gave a talk last Wednesday night, and just before I went there, I said, oh, wait, I remember now. I can pick up my gold chart that goes way back, and now I just found my crude oil chart, which I can go back to 1983, and the low of April of 1986 in the continuous contract is 36.94, and we're trading right now at 36.31. Isn't that unbelievable? That's 30 years exactly.
All right, I couldn't go back that far. I see it on yours now. Very interesting.
That's interesting, and we've just broken it. So now let me do this. I'm going to get rid of that chart. I want to go back to where we are right now. I'm going to go to the crude oil continuous contract near term. And all I'm saying is that I think that this is the first opportunity for crude oil to at least have some kind of a bounce to establish an arch formation in the weekly chart, and that would take me to between 41, well, it depends, of course. It has to close above 37.85, and that'll say it's above the 9-period moving average comfortably. Then I've got 38.66, 39.70s, and 41.10s. Those are that's the upside levels that I'd be looking at. I don't want to get carried away, but that's kind of the what would happen if the dollar doesn't have a big spike tomorrow when the Fed. Hey, can you hold on?
Absolutely.
Okay, good. We'll be back right after this break with Georgia, New York, Dow. Oh, look at the chart I showed earlier on. Look at that.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're back with George. Just let me quickly say two emails that came, and I've got one is J&J is really nice. Yep, that's part of the defensive group. And the other question is UNG. Carl says, this is a good one. He says, Mr. Chapman. Oh, Mr. Chapman. All right, that's good. Is it time to buy UNG yet, or should we wait for an up day? Haha. Thanks, Carl. Carl, I would say that crude oil looks a little better to me than natural gas. They're two completely different animals now, and UNG is just suffering from being a out of favor group. So the UNG, I would probably say to you, I'd give up 1 day's worth, but if you want to bounce, wait for it to bounce to the 752 area. If it holds that on Wednesday afternoon to Thursday, if it's holding there, you could play a bounce, but it's the only way I would do it, and I treat it as a bounce. So let's go back to George. So George, the way I'm looking at this, I'm not sure what the January contract letter is. I just don't remember January right now. But the way I'm looking at it is that the crude oil hasn't It hasn't got all the ingredients that I would like. I would love if the volume that we had, the volume spike on the 8th, was the volume spike yesterday. Then I'd say, you know what, we could rally for maybe 28 sessions before retesting, but that's very different. So I do like the weekly, but we're not even halfway into the week. So I'm going to say to you, the idea that crude oil could move higher is more one that I'm talking about shorter to, I would call it 6 weeks maximum, and then it's going to break to the downside 6, maybe 8 weeks if you're really lucky, if there is a decent rally. So I would not get too carried away. I don't see this as a turn. And when I'd rather, we can take another time and we'll talk about things like an Exxon and a CVX. I'm suspecting
that's good. That's good direction, because at least I could do the research on the equities, and then we see once we get a bottoming process going on.
Correct, because I think that Exxon and CVX have to do a little bit more testing, but they might have made pretty significant. Look, they've already made 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 18, 19. It's already 19 weeks since the August low back at 66.55 for Exxon.
Quick note. Unfortunately, I did a correlation on the dollar and crude and the dollar and gold for the last 20 years on a monthly chart. And I have to say, between 01 and 02, when the dollar was strong, crude and gold both dropped, and the same thing between 08 and 09.
Yes. So there's been a relation.
Unfortunately, I think we have to wait for that bottoming process before we could really start going heavy.
Sink your teeth into it. Right, I agree. Great call. Thank you so much, George, and we'll be looking at that.
I hope be well. Thank you.
You too. Thank you very much. So, folks, let's just do this. See the VIX index? You see how sharply it's pulled back from yesterday? I've gotten the daily. It's an alternate count. It may be an E. At this point, I'm calling it a C. Just if it breaks under 19, I'm not going to call it a C anymore. It'll be that alternate count E. But look at the way the VIX index declines severely after climbing sharply. And you want to see, if you are looking at this as that the Fed, whatever the Fed does, this market is going down to lower lows and lower highs. I would suggest to you that you need to see the VIX index start to hold in the 20s, because it's turning the mid-teens now into a base. So if it starts to trade if on Friday, the volatility index is closer to 25 than to 18, I would suggest to you that this market has very serious problems and it'll make lower highs and lower lows. If, in fact, for whatever reason, you start to see the VIX index slide, we'll talk more about it tomorrow, that's going to be a really good sign to say that we can start to move high to try to get back to 17,800s on the Dow. That's going to be a very big issue for me. And I'll be back with Tom a little later today. Hey, have a great day, and I'll see you a little later on. Otherwise, I'll see you tomorrow. Stay tuned for the Swimming Lesson.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.